Many people consider Warren Buffett to be one of the greatest investors of our time. Yet, few realize that they have the opportunity to invest in a similar way. Why don't more people invest like him? Before that question can be answered, let me explain how many great investors achieve their success. They diversify by investing in all areas. In addition to publicly traded stocks and bonds, they buy private companies and real estate. It is common knowledge that Warren Buffett owns large positions in publicly traded companies such as Coca-Cola, American Express, Kraft Heinz, and IBM. What is not widely known is that approximately 50% of his holdings fall under the private equity category. So, now that we know how the great investors make their money, we can answer why don't more people do that. There are 4 reasons that individuals and, quite frankly, advisors are afraid to go down this path. 1, due diligence. Many people do not have the time or the resources to do the due diligence that is necessary to invest properly. 2, expense. With lack of experience, there is a great fear of overpaying for these types of investments. 3, risk. What if the business fails? And 4, lack of liquidity. You need to have a longer time horizon. Those 4 reasons seem like pretty good reasons to stick with traditional investing. However, one of the biggest shortfalls of publicly traded companies are that they are managed for short-run results. With performance information readily available to the public, management teams can feel pressure to forego long-term profitable decisions and do what gives immediate results that may provide income incentives and job security for that management team. Most private equity firms are focused on long-term growth. When you add real estate to the mix, you have reduced the overall portfolio risk by diversifying. This adds stability, and you have created liquidity through the cash flows generated. FW Opportunity Fund was designed to give accredited investors an opportunity to further diversify their investment portfolio beyond the traditional public markets. We have found that high net worth individuals are interested in growing wealth in a prudent and diversified way. With that in mind, recent research has guided us towards using a 3-dimensional model. 1, liquidity. By placing a portion of the portfolio in publicly traded securities and having cash flow generated from real estate, we have increased the liquidity of the portfolio. 2, wealth preservation. Through diversification, volatility of the overall portfolio typically is reduced, thereby providing stability to the overall valuation. And 3, wealth creation. Investing in private companies that are focused on making long-term profitability decisions and real estate that has typically increased over the long haul due to long-term labor and material cost increases. Provide a path toward long-term growth. Why FW Opportunity Fund? There is a unique opportunity available for several reasons. 1, fund management is aligned with advisors and other valuable sources that help provide the due diligence and useful insight to qualify potential investments. 2, being a fund of modest size will allow us to look at some smaller deals that get overlooked by the bigger funds. Less competition could provide better terms. And 3, we are looking for investments locally and regionally first. This could help spur growth and jobs locally and provide a better opportunity for due diligence. Before investing in FW Opportunity Fund, you should read the private placement memorandum and obtain a copy of FW Investments ADV Part 2 brochure. To find out more about this opportunity, you can call me or you can email me. Thank you.